So good afternoon. I'm joined by Bradley Rees, Chief Commercial Officer at Checkout.com. Brad, good afternoon. Welcome.
Good morning. Good to be here.
So an impressive background in payments, and currently, as I said, with Checkout.com, spending time in different geographies. So a very broad view. So very much looking forward to the conversation. I think a couple of topics to go through. Customer experience, moment of truth, observations there on what's working, what's not working.
Sure. I mean, I guess it depends where you are and who you are and what problems you're trying to solve for on the merchant side, and obviously as a customer as well. That's the beauty of payments on a global scale. It reminds me always of the mantra of international business: go global, think local. When it comes to payments, obviously preferences change vastly from country to country. You can cross the border from the Netherlands into Belgium, Belgium into France, and the way people want to pay are going to change every time you cross another 50-mile border. Some of the things that I guess we're thinking about, and the way I kind of broadly view payments, is really, this is old school marketing speak, but payments is the fifth P of the marketing mix. That's like kind of pre-digital, the promotion of it, obviously the placement, everything else. Of course, especially in an online world, if your customer gets to that final step in the journey where they are about to give you money for all of that effort you've put in, and their payment fails, or they don't see a way that they want to check out using, obviously all of that effort's been for nothing. So you really can't ignore payments as the crucial final step in that journey. It doesn't matter how good everything else is up until that point. If customers aren't comfortable with the checkout experience, and we can delve into what that means a little bit more, then you're very likely to see some drop off.
All right. So we were talking, Brad, we were talking about shoppers dropping off at the end of that process. And as you rightly called it, the moment of truth. Merchants have invested a lot of time and money bringing the shopper along. And obviously the shopper has also invested time. And then it goes wrong. Can you shed some light on what are the reasons or causes why that transaction then doesn't convert?
Yeah, I mean, there can be many. Obviously, the way you approach optimizing your own customer's journey depends quite significantly on the types of goods or services you're providing. For example, if I'm using an online brokerage, I may be transferring a large amount of money into my online account. In that sort of experience, I'm going to value security more than a frictionless experience. But of course, when I'm ordering my lunch on Uber Eats, in between doing emails and webinars, of course, at that point, I want to do things instantly without even almost having to look at it. So really, you're looking at kind of, what are the reasons that people may or may not drop off? You can say friction is a broad word, but that's not really a reason people drop off. That's more about customer satisfaction, delight. And if you have something where there's going to be frequent purchases made, of course, reducing that friction is key. But people also want to balance that with security. And if I'm making a very important transaction for an expensive item, I don't mind being asked additional security parameters to be entered, because ultimately it gives me more comfort level as a consumer about completing that purchase. So I think that that's the first lens you need to view things through. What are you selling? And ultimately, if you were putting yourself in the customer's position, what would you think of additional friction being applied in this form of something like 3D Secure, for example? We'll come onto this a bit later, but 3DS2 has launched now, of course, as well. That's the challenge when you're using a card transaction that your bank can choose to basically enact, or the merchant, of course, can choose to mandate that on their side. Under PSD2 in Europe, this is a mandate in many cases. In the rest of the world, it's an option. So you need to understand on a sliding scale based on the product price, the risk of loss or theft, the attractiveness to fraudsters potentially. How would you want to apply something like 3D Secure to get the balance right between challenging when security is necessary and required, but equally providing a frictionless experience when the risk is lower? So a kind of a risk modulated approach using some of the later tools that have been released in the payments world. 3DS works on a very different way in different countries, but 3DS2 definitely is a step forward. I think the other side, and we touched upon this, at the very beginning, the localization aspect. In many countries, people just don't want to use a card. So if you come from a US-centric approach or even a UK one, going to your country, the Netherlands, it was a surprise to think that people want to take out this clunky calculator and type in codes, and why would anyone want to do that? But I believe, and you can definitely course correct me if I'm wrong on this, but a lot of it is cultural as much as it is anything else. People don't want to buy on credit. It's about buying directly from their bank. So then it's a case of providing a comfort level and an element of localization to your checkout that just ensures that the customer, again, feels secure and feels that they're checking out in a method, using a method that they're familiar with.
Yeah, very interesting. We've actually, we have the product management of Ideal is also speaking here at the forum. So I think a very subliminal bit of PR to find out on a I think a leading alternative payment method. And you're right. What you'll hear is the clunky calculator is going. They've noted that. But you touched on alternative payment methods, local payment methods, Ideal in the Netherlands, but there's a lot more. Is that something where you make the difference? And is that something that you want to own that stack, or is that where you work with partners?
I think it depends. If you look at Checkout's general positioning, key to our success has been bringing the latest technology that we own and control and drive to the market. I mean, fundamentally, that's what it boils down to. You know this very well, but there's a lot of old actors in the payments chain. There's a lot of platforms that are still being used very, very broadly globally that are over 2 decades old at this point. We are in a technology-driven industry. Of course, there's a financial element to it, which is why payments gets grouped as under that fintech umbrella. But really fundamentally, the quality of processing, the ease of a merchant connecting, offering new payment methods, is all driven by the technology. So ideally, we want to go and build connections to any payment partners or any end payment method like Ideal directly. It provides a better user experience. We're able to control the flow as much as we can. But there's also an argument that a lot of this, especially with local payment methods, happens outside of our control. We'll send an API call on behalf of the merchant to Alipay, for example. But then the user experience is really driven as soon as that redirect happens. So I think it's a different sort of logic that we would apply on whether we're doing card processing, where owning the payment value chain is really, really beneficial, helps on authorization rates, reduces cost, increases the speed of the transaction, increases the reliability. It's a very complex value chain when it comes down to the world of card acquiring. Yet often for local payment methods, it's just very different because ultimately you're redirecting the customer to a UX that is outside of our control anyway. So I think it's an either or approach, but always with the idea of, are we offering something to the end customer that our merchants will find valuable? So does it either increase their sales, reduce their cost, or reduce their risk?
Yeah, very interesting. And the shift to online and consumer expectations since the pandemic, we've seen a lot obviously go online. The influence of mobile, you already referred to it a little bit there, but with the Uber Eats example, but I think that's more widespread. Any observations or examples from your merchant base?
Yeah, it's market by market. I mean, if you look at markets like Saudi Arabia, obviously in the Middle East, I think we're very well known. We have all of the relevant local payment methods. It's not just a case of kind of understanding that people want to check out via mobile. Half of the consumers in that market will prefer using a mobile device for any online transaction. You're then linking that with the local payment methods and the best UX. So, okay, it's a very iOS-driven market. It's a good, GDP per capita. People can afford iPhones. So you have a lot of Apple Pay transactions. However, if you look at Visa, MasterCard issuance in the country, over 40% of all cards and all transactions are driven on MADA. MADA is a local debit switch. So if you want to be successful in Saudi, it's not just about saying mobile is important. Of course, having a mobile site is important, or an app is important. Having Apple Pay is important, absolutely. But being able to, for example, link a MADA card domestically in that country to Apple Pay on a mobile device is really the end state that you would want to be in, to be able to really provide your customers in that market with the best way of checking out possible. And I think that's often the key in payments. Is it's not just about saying, do you have Apple Pay, or do you have payment method X or Y? It's about understanding how you've built them and how you've customized it to the local geography to really make sure you're getting the most out of it and giving your customers the experience they want.
Yeah, I think a great example of thinking global but acting even very local, I would say. There's a lot of talk on data and monetizing data. Is that something you do, and how would you see that as part of a payment strategy?
Yeah, so it's funny that when I got into payments over a decade ago, it was very rare to find any company who had someone with the title head of payments. That's really changed. The largest organizations, the Airbnbs, the Amazons of the world, I mean, their payments teams are hundreds or even thousands of people now. It's a very recognized department. However, within those departments, it's telling that the leading merchants, especially, the big sort of tech giants of America, very focused on things like authorization rate analysis. They pair their product leaders in payments with large data science teams, with the data science teams outnumbering the product managers. I'm not saying that just because the big guys are doing it, everyone should be doing it, but it tells you there's probably some logic in what they're trying to do. But fundamentally, the way that they're using data is they're not monetizing data by selling customer data. There's nothing nefarious about this. It's really getting a deep understanding around each transaction profile and each customer profile. So if you can really understand from a merchant perspective why your transactions are failing, either on the outbound authorization, on the risk platform level, it gives you an understanding of what you potentially could do to recover that transaction. So there's no silver bullet in payments. Very rarely do you find massive jumps in authorization rates. But at this level, increasing a merchant's authorization rates by just 0.5%, that translates into tens or hundreds of millions of dollars for the largest enterprises in the world. So this is something that we and others can help with, is in providing firstly that granular data feed, ensuring that all of the vast amount of data in the payments network is actually captured and made available. Again, we talked about 20-year-old plus platforms. They inherently don't have the ability because data just wasn't recognized as being what it is today. So it's the old architecture that exists often within the industry that prohibits merchants actually having access to their full set of data. And it's not just authorization rates. That's one way to increase sales, so not really reducing cost. But the other way that you're finding data is used nowadays, for the last at least 5 years and increasingly, is around fraud detection. It's great to have the old rules and risk-based scoring systems, and they still have a place, absolutely. But fundamentally, if a fraud network is going to attack you with a botnet with 20,000 stolen cards in the space of 5 minutes, no rule is going to adapt fast enough. You really need to adopt a machine learning model. And just by nature, a machine learning model is only as intelligent as the data you can input into it. Hence, the more data or a complete data set
exactly.
uses that. So.
Yeah, so truly data is the new gold in that setting, helping you optimize and of course also justify these teams. Speaking of these teams, in selling from the provider side and of course buying from the merchant side, have you seen a change in the people who are buying? You were referring to, and it's come up in other sessions as well, there is now a head of payments or a payments team. Have you seen other changes in how people are buying payments, quote unquote?
Yeah, it depends again on the maturity of the customer. Sometimes it's still a CFO who makes the decision based on the cheapest price they see, but increasingly it's not. This is a technical decision, and the RFP processes that we see are increasingly driven around, getting a deep dive into actually the underlying technical architecture, which is supporting their payment system, not skipping straight to the end of a proposal and looking at the price sheet, as definitely was the case 10 years ago. So there's been a paradigm shift. I think payments has now been recognized quite clearly as a differentiating factor versus just a cost point. And yes, you could say that's potentially long overdue or whatever the case, but I think it's still an ongoing journey. We're still quite early in that step. So when you talk about people who are choosing or driving payments decision-making, it can come from the finance team, it can come from the technical team. But very often what we're seeing is actually anyone who's in charge of business expansion. You'll find that business development leads are actually very interested in understanding how payments, especially when, for example, you're entering a new market, can help them put their best foot forward. If you're going to spend money on localizing your marketing, your language of your site, your currencies, obviously you should be localizing your overall checkout and payments experience too.
Yeah, in my experience, that is typically payments is involved at a very late moment when it's difficult or too late, to do that localization, as you rightly point out, language translation, even support, and it becomes a half a solution, and then payment is blamed on a struggle.
Yeah, you very rarely get a round of applause if you process a transaction successfully, but of course, if you drop one, then you're in trouble. So it's
exactly. It's almost like water from the tap. It's expected to be there 24/7.
Exactly.
So how important are partnerships and the role of partnerships or being part of ecosystems, both for you but also for clients?
Yeah, I think you have to view. So I can approach that from two perspectives. Firstly, there's vertically integrated partners who we have, the likes of BigCommerce, Salesforce Commerce Cloud, Magento, you name it. We have integrations with these platforms because we focus on payments. That's what we do the best. We help merchants move money either in or out of their business. When it comes down to hosting products on your website, there are companies who specialize in that area. So of course, making it easy for merchants on those platforms to work with us too. So having basically plugins available. Of course, I mean, it's a good barrier removal, and it allows people to kind of try us out and see what we offer. We have a really strong respect for what the upstream and downstream partners mean to our merchants. And of course, these are people who we need to cooperate with and make sure that our vision of what we're delivering to these end customers is aligned to a certain extent as well. And so we've done a lot of that work over the last year or two to help build out our overall footprint within these very disparate ecosystems: subscription management, retail management, travel platforms, you name it. When it comes down to how I view payments in particular nowadays, it's maybe, while checkout absolutely can be the one-stop shop for customers who want to access their customers around the world, increasingly payments I view it as a toolbox. And that's how we've really built our systems as well. I think it's naive to say that the biggest companies in the world, the Googles, the Netflixes, are going to use one payment provider globally. It's just not the case. Payments is increasingly a toolbox, and you try to pick out the best tool for the specific job that you're managing. So knowing that there are some global initiatives, we touched on 3DS2 very briefly. For example, the way we built our 3DS2 API was to be agnostic, so that you don't have to build a connection for that API with every payment partner you have. You could use that and work with multiple acquirers outside of checkout, and really it puts the control to the merchant side. It's not locking anything into a black box. It's giving them optionality, access to a toolbox, and saying, you pick out what is relevant for your business. And we have respect for the fact that won't always necessarily mean it's going to be checkout in every market, in every situation. But if we can provide you with tools that can be used agnostically across your other partners as well, that's basically the premise to how we've developed all of our products over the last 2 or 3 years.
That's actually very impressive. So that's even an element of payment orchestration as part of the solution.
Yeah, I mean, you can look at how the industry is evolving. And you had Gateway, and Gateway would serve to be your token vault. It served other purposes too, but fundamentally it routed transactions to your fraud platform, to your processing platform used by your acquirer. There was a very clear four-party model. You could argue that nowadays orchestration is a layer in between, sits kind of with the gateway and helps merchants kind of go along that journey of, I used to put all my business through one payments partner. By using two, do I actually improve anything? And I think that's kind of the journey that you see a lot of people go on. You have the enterprise merchants up here. You have multiple providers and have their own data science teams. But if you're a merchant who's here and just has one payment partner, maybe you started off with Stripe or Braintree or one of the SME guys, at some point you go through this evolutionary journey. And I think that's where orchestration is a really helpful step to get to, I guess, the final state, which is having everything managed in-house as a multi-billion-dollar, 100 data science team person. Obviously.
Yeah, exactly. The data team through an API almost.
Exactly.
All right, moving towards time is never on our side, I'm afraid. So, sort of final thoughts. We've had a very strange 2020, but no doubt you have some thoughts and views for 2021. As a final thought, could you share some things that you're expecting, or maybe some advice for the people watching for 2021?
Yeah, 3 things to keep an eye on, I would say, and it's going to be in different ways. I'll start with open banking, because we touched on local payment methods, and you mentioned Ideal, of course. And Ideal is a very well-run payment method. I think they're a poster child for what local payment methods could be. open banking in theory could at least be the evolution of this. You have great companies like Plaid who have entered the European market now as well. So you're looking at ultimately how these companies globally will start interacting and taking advantage of either, better customer experience for bank-based payment methods, or the true vision of what PSD2 foresaw, which was the ability to actually truly have open APIs. I don't think you're going to have any winner in that space in 2021, but I expect to see it emerge as a relevant segment in the local payment method space. Number two would be something called network tokenization. It's a bit of a niche thing to say. Not everyone may be aware of what this is. Look into VTS, Visa Token Service, and MDES, Mastercard Digital Enablement Service. The new form of account updater that has been very successful for subscription or recurring merchants in the US. It's going to go global, and I think it's going to be ultimately the future state of this wonderful recurring tool that merchants can take advantage of. Do we have time for a bonus one?
No problem.
I think 3DS2, just to hammer that one home. It's going to be the new form of authentication. It is going to be very effective. Issuers will have more data to make better decisions. And I think that's going to be probably the go-to way globally for merchants to protect their card transactions, even in markets where previously using 3DS2 has really damaged authorization rates. I think we're going to start to see that change in 2021.
Yeah, as a final thought from my end, I also think the consumer will get used to it, and being interrupted in the flow becomes the norm rather than the exception. So the acceptance from that perspective will go up, or maybe tolerance will improve.
Yeah, I think both sides of the equation. Customers will get more used to it, and issuing banks will become more comfortable with it to the point that hopefully stop challenging as well. But we'll see.
Excellent. Bradley, thank you very much. Very, very good. Some very useful insights. Appreciate you taking time out to talk to us.
Pleasure. Thanks for having me.